Hi everyone, you're all very welcome to the week in markets run through of, I suppose, the volatility that we had into the tail end of last week. And of course, looking at the early parts of this week, looking ahead to the price action this week. As ahead, we've got two very, very busy weeks of price action. Of course, we will be on the wires all week discussing the fundamentals. We've got the Fed coming up. We've got CPI data coming out. We've got GDP growth coming out. We had European growth last week, and of course, we do have US growth coming out as well. So the next couple of weeks is going to be really, really busy from setting the tone into year end. Okay, seeing does the narrative of bullish price action that we saw in the stock markets over the last 6-8 weeks continue, or do we see a little bit of leveling off into portfolios from an institutional perspective? Now, firstly, apologies for the last couple of days. I have been suffering with COVID, however, I am on the mend, so we will be kind of back to our usual style of kind of 3-4 videos next week, forecasting all of the data, all of the figures, retrospectively looking at the price action, and of course putting a clear logic and breaking things down for everyone. So firstly, I suppose as we turn, I suppose, from the end of last week into the beginning of this week, we really have to look at the idea of the PPI numbers on Friday, because of course the PPI numbers came out a little bit higher than expected. Now the year-on-year PPI came in on expectations. However, the figures excluding food and energy and the month-on-month PPI both came in marginally ahead of perspective. Now it's also important to note that this month there is a bit of an anomaly because the PPI figures came out before the CPI. But in months this year where the PPI figure has actually come out ahead of the CPI has also come in a little bit higher than what people are expecting. So it's important to be aware of that dynamic as well, because of course, if the CPI comes out higher than expected on this week, and then, of course, that's going to factor back into the price action. You're going to see indices struggle. You're going to see movements into risk safety or risk orientation, out of risk orientated assets into safety assets. And that's really, really an important thing. Now, of course, as we said this week, we do have a lot on the wires. We do have multiple interest rate meetings. We do have BOJ. We do have the PBOC. We do have figures out on Tuesday in the US. We've also Canadian data out as well. And of course, on Wednesday, Thursday, we do have figures from Canada as well regarding BOCs. We've got more US data. And of course, then on Friday, we do have GDP from Thursday and Friday from the UK, the US. And of course, we're looking at all of these different pieces of information together. So of course, the next 2 weeks are really, really going to be important, really to kind of set the tone, set the structure of price action over the next couple of weeks to see, obviously, how does the portfolios balance into year end. Now, structurally speaking, I think the first place we need to really look at is the DXY, because I suppose for anyone looking at correlation within markets, anyone looking relation to sentiment, really your DXY is going to be your first key indicator, right? And that obviously determines whether dollar is pushing higher, if it has underlying strength, or if it's a case that the dollar has predetermined weakness built into the price action. Now, of course, over the last few weeks, we've seen that. We talked about it previously last week and obviously the week before, that continuated sell-off in dollar weakness. But it'll be interesting to see if there's any sort of snapback from this 104, 105 region we talked about last week to see, do we actually break this bearish correctional structure? So we've obviously got a longer run bullish trend with lows and highs built in. We've seen that correctional move back into these areas of interest here. And of course, you only have to look at the fact that we are holding relatively above the June highs here at 104. So that's kind of holding as a bottom for dollar weakness at this moment in time. Now, structurally speaking, from there, we also have to factor in that we do have this flagging structure currently playing out with lower lows, lower highs, lower lows, lower highs on the daily here in the DXY. So it's important to be able to structurally identify that as well. Now, when we progress to the lower time frames, for those who are kind of breaking on the shorter time frame provisions, let's say 4 hour down into the lower time frames, 15 minutes, 1 hour, etc. We can see as well how clearly the price action is starting to become a little bit more flagging like in structure. So we're getting those lower lows, we're getting the lower highs, we're getting new lows, we're getting the pullbacks. And every time we get any sort of correctional move in the dollar, it seems to unwind very, very quickly. Now, structurally speaking, from here, we can also see on the 4 hour, on the most recent leg lower on the DXY, we have found these short-term bottoms, as we said, around 104. And over the last week or so, given the price action, given time for the price action to develop and kind of unwind, we are seeing this kind of short-term 1 hour break of structure. So what I mean by 1 hour break of structure, all of this bearish order flow has technically broken structure here because the price action is taking out some of these bearish order flows. So these lower highs here, this one here is still intact, but of course it'll be worth keeping an eye on this one. And it'll be really worth seeing how does the price action develop, as I said, into the early parts of this week between 104.50, 105. We found a short-term bottom, we've broken up, we're flagging back down, and really that becomes the catalyst of saying, how does the markets react in this region? Now, of course, the only thing that's going to symbolize further dollar weakness, further orientation into risk assets like the indices, like gold, like your FX pairs against the dollar, is really price action breaking this potential upside pullback and breaking through and continue to move to the downside, right? That is literally the key invalidator here. We are flagging higher at the minute, but it's really worth saying, well, if the price action breaks through this 104 level this week, that's really, again, continuing that higher time frame of continued lows, and probably going to see the dollar continue to move, most likely back down to kind of 102, 102.50 really becomes a fairly logical scenario. So we're really waiting to see if there's any sort of reaction from this level, or as I said, if this, I suppose, existing trend here from, as I said, the middle of November, which we're now dating back approximately a month or so, is going to continue playing out and the price action continues moving lower. And that's going to be the key catalyst. Now, my structure perspective is that really, if we're going to see dollar strength, we need to see the dollar breaking out of this 4 hour structure, right? That is kind of, for me, the most important thing. You've got 4 hour lower highs, 4 hour lower highs. You've got another short-term high here. Really, it's a case of now, can the price action react off of this short-term discount zone, push higher through this initial high, and then really push on to try and take these order flow moves out. And I suppose that really becomes the key consideration, that if we do that and we progress back up to the daily for a second, you're then really looking at the aspect of, well, we've got lower high, we've got lower high, we've got lower high. Can we break up, pull back, and then start to see flagging structure to the upside? And that really becomes the most integral element of consideration for dollar strength, that we need to see this encapsulated move of price action being taken out to see that assimilation in the likes of the indices, in the likes of gold, in the likes of Euro USD, JPY USD, etc., to play out. And of course, it's important to be able to reconcile both of those moves equally in the same right. Okay, and that's really kind of looking at the DXY individually. Now, excuse me, when we move to Euro USD, okay, we're seeing a very, very similar dynamic. Okay, the dynamic here in Euro USD is fairly straightforward in the sense of, well, we've been we obviously broke through the bearish trend because we've obviously had lower highs, lower lows, lower highs, lower lows the whole way down until such a time where we established kind of an exhaustion in the bearish trend through the course of the year. And then we started to get that bullish impulsing moving price action to the upside, very, very corrective in structure. Now, again, similar to what we're talking about there in the DXY, we have come all the way back up into this liquidity level here, right? So structurally speaking, this area of liquidity from June, right, this sell-off impulse and then this follow through all the way down to this move, has all of this price action has all been mitigated because the price action is broken up through this bearish price action structure, taking out the lower highs, and it's continued to progress all the way higher back up into this region here, as I said, between 105-ish and I suppose 106 with the high of the wicks. Now, if we're looking at the excuse me, if we're looking at the this bullish order flow here, it's becoming very, very flagging like, okay, because of course we've had that very rapid upside breakthrough, very, very clear buy side imbalance with literally not much of any sort of correctional mitigation or pullback per se. We've began down here at 97.50, 98. We've gone to 103, 104, relatively little ease with the exception of maybe one daily bearish close. But since then, the markets has become very, very flagging, as I said, up here between 103 and 105. Now, structurally speaking, from there, if we look at the price action and if we identify the structure in the price action, we can see, again, alluding to the DXY bearish order flow, we're seeing euro dollar create higher highs and higher lows. So structurally there, higher high, higher low, higher high, higher low, higher highs into this consolidation now. And as we can see here, it's really just a case of how does the price action develop at this region. Now, of course, this is the last selling bearish impulse before the price action flags into this consolidation. And now we can see very, very clearly that the price action is effectively in consolidation in this region. So now we're waiting to see where or what is the next directional bias out of this period of consolidation. Is it a bullish breakthrough and a continuation of propulsion to the upside? Or is it a case that we're going to start to level out now and we're starting to see that kind of shift in trend dynamic. And that's really going to be the big thing over the next few days, to see whether we do get that shift in dynamic, see whether we do that, get those correctional moves, or whether it's something that's kind of more a brief flash in the pan. I think that's really the kind of the most important thing over the next few days, really kind of looking at it broadly speaking. Now, next on the list then is going to be cable, right? So cable has got a little bit of interest for myself, purely because, of course, the massive underweighted strength that's really coming into the pound against the dollar at the minute is still continuing to play out, right? So, of course, structurally speaking, we had that massive collapse. We had the political ramifications of the Truss government, and considering how short it was, we had that kind of collapse in the pound, but then it's worked its way back up. It's worked its way back up, all the way back up to this kind of mean reverting region here around 122.50, 123. And I'm sure if you probably had an EMA of 200 or 800, it probably wouldn't be too far away. And of course, we've just broken above the 200 EMA. We're still kind of some way to go to get to an 800 moving average up here at 128. So that's obviously factoring in the broader perspective. Now, structurally speaking, the EMA crossovers, I don't use them personally that much, but sometimes I use them as a complement just to kind of understand the trend dynamic. And we can see here that the price action has been very, very corrective back up into this 200 region. And we've been holding fairly comfortably over that 200 EMA pretty much now for the last couple of weeks or so. And that's been pretty much confirmed last week, broadly speaking. However, if we just remove that, the EMAs for a moment, we can see here, structurally speaking, how the price action is still holding at this kind of 122, 123 level, right? Broadly speaking, even less than 123, probably around about 122.75. We've got a lot of price action kind of structured, developing off of this region of interest. And of course, that's where the price action is currently being set into last week's, obviously, weekly close. Now, if we look at it kind of broadly speaking, as I said, this daily area, we're expecting to see if there's any some sort of move, because of course, this was the 4-hour order block before we sold off. Then we got that double mitigation back into this zone of interest in August. Then we had that long-winded sell-off all the way down to September for the price action returned to said region. Now, of course, we're seeing bullish order flow. We're seeing that here very, very clearly. Bullish emergence, bearish correction, new highs, bearish correction, new highs. So we're still creating bullish order flow, without a doubt. Now, structurally speaking, if you're looking at a higher time frame, daily 4-hour perspective, we're still getting those bullish order flow moves. So of course the trend is still bullish per se, right? So there's no kind of real inkling yet that this is kind of changing dynamic, only for the fact that we had formed last week a short-term top up here, right? You can kind of see it here if I draw it out very, very quickly. From a price, now this is just focusing on price action, just focusing purely on the price action, the battle between the buyers and the sellers. And we've seen last week how we did get a further kind of consolidation. We did technically break structure from this short-term impulse, and we have flagged all the way back up into this region up here, as I said, between 123. Now, that's going to be the big point this week to see, do we see that correctional impulse back down into this level between 119.50, 120 from here? Or if we see that, excuse me, if we see that continuation in strength, trying to take out this short-term high and ultimately kind of progressing higher up into this secondary daily level here, which comes in at around about kind of 125. And if you look at our 1-hour chart as well, just to kind of finesse all of the price action structures, we can see here very, very clearly, if we just refine that as well, fairly clear consolidation, it's broken structure, and it's flagged all the way back up into this liquidity level. Now, short-term perspective, you can actually see how the wick has come fractionally into this region. We've rejected this 123.20 on the 1-hour chart, and we have closed back underneath 123 fairly convincingly, and back underneath this daily order block level as well, 4-hour order block level, should I say, where the price action is currently holding underneath. So that really becomes the kind of the impulse that if the dollar strength does start to pick up, you're probably going to see cable sell off from this 122.50 level. And then it becomes a case of, well, we've got short-term bullish order flow, we're looking to take this out, looking to take this out, looking to take this out, and see an assimilation back to this higher time frame, higher low, which is back into this kind of 119.50, 120 level, right? And if we bring in the Fibonacci's as maybe a secondary or tertiary confluence, you can see as well from a structured perspective how the markets reacted off the 88.6. Hasn't fully mitigated the final 1-hour order block, but it has done pretty well in terms of cleaning a lot of this liquidity out, and is now stuck between the 61.8 and I suppose this 786, 707 squared Fibonacci levels. Now, of course, if you're wondering why I use 707 as a Fibonacci tool, or Fibonacci numerical sequencing number, it is the square of 61.8 and 786. So effectively the square of these two numbers. That's why I've incorporated that in as a third kind of confluence as well. All right, so that's kind of where we are on cable. If we move across to dollar CAD, kind of a similar scenario, but on the inverse. Okay, so dollar CAD has been very, very bullish. So of course, if GBP USD sells off and USD CAD sells off, that's obviously a disenfranchising move between the correlations, because of course, is the dollar going to be stronger or is the risk assets going to be stronger? And that's really going to be an important note, because over the daily timeframes, as we said, we had that massive run up in September into the early parts of October, where we had that top formation. We did get a correctional move back down, and the market has flagged all the way back up into this zone of interest that I've kind of looked at here, 707 to 786, and the price action is holding relatively above or relatively below this region. Now, we did get a couple of daily wick rejections off the area. We did try and get the price action to break through, but by and large, this kind of 137 level that we've talked about even last week and even the week before is still holding relatively nicely. Now, of course, when we break to the 4-hour structure, we can also see very, very quickly how the price action is sold off into this bottom structure, flagging beautifully back into this region. And of course, if we look at the price action from Thursday, Friday, we formed a top formation, we've broken down, we've flagged back up, one last impulse, and it does look now that there is going to be a change in sentiment here. But of course, you also have to factor out as well, right? The Canadian dollar, with every FX pair, you've got the base and you've got the quote, right? But with the Canadian dollar, we've had massive weakness over the last few, probably 4 to 6 weeks or so in the Canadian dollar, because of the oil prices coming back down, because of fuel prices coming back down. So it's important to factor that dynamic in, that Canadian dollar weakness exclusively has been very much tied to or correlated to the weakness in the oil prices. So of course, if we see oil prices start to, I suppose, not rejuvenate, but level out after what's been a very, very weak 4 to 6 weeks of price action for oil, that's of course going to help the Canadian dollar. It's going to give the Canadian dollar a little bit more reinforced strength, because of course, when oil prices were strong, in the face of overwhelming strong dollar in May, June, July, and August, Canadian dollar just ran sideways. And of course, that's an important dynamic, that when you're looking at an FX pair, you've got two currencies to take into consideration. Yes, the euro, the cable, has been weaker broadly through the course of the year, and we did get some correctional moves over the last few weeks. But the euro and the pound has a much more significantly different internal fundamentals to it than that of the Canadian dollar. And of course, the Canadian dollar raised rates last week, which is still meaning that the BOC has a hawkish outlook from a fundamental perspective. And you also have to factor in that the growth is still fairly strong in Canada. So you also have to factor that consideration in as well. So if you're looking at some of these FX pairs, it's important to look at the intangibles within each of the currencies, because it doesn't necessarily that what one does, it's going to be reciprocated across the board. Okay. And that really becomes a really, really important factor or element to take into consideration into year end, and of course into 2023, as we look at the different moving parts within the markets. All right. Now, last but not least is, as I said there, the 1 hour structure. So we had that 1 hour top, we've broken through, we've flagged all the way back up into 137, and we're creating that top formation here. So it's really a case of, does dollar CAD continue to pick up steam? Do we take out these highs at 137 and ultimately progress higher off of much stronger USD, much weaker Canadian dollar? Or do we see this dynamic play out that we've kind of talked about for a few weeks, of where we get that top formation? We're still creating bearish order flow, you remember, because yes, the daily trend had that massive impulsive move to the upside, but now we're starting to create bearish order flow. We've got lower highs here, we've got new lows, we've got lower highs again. So the trend potentially is kind of correcting for kind of a more moderate movement, potentially maybe back into 130 over the next few weeks. Now, again, whether that happens or not, let's wait and see. But the initial signs so far are very, very positive. So it's worth keeping an eye on this opportunity this week to see if there's any sort of developments per se. All right. So that's dollar CAD. Next on the list is really dollar yen, and this is going to finalize the kind of last few FX pairs. Now we're going to do pound run through this week. We're going to look at some of the euro pairs this week as well. So if you're looking for pound and euro pairs, we will be covering them through the course of the week as well. We won't just focusing solely on the dollar. Now dollar yen has been like a wave of volatility on both sides. We had that massive breakthrough from February this year, where the price action is leveled out into kind of 149, 150, kind of key levels up here. We've broken down through the order flow, and the price action is still creating kind of bearish short-term order flow. Okay, now when I look at dollar yen, structurally speaking, from last week, we had price action very, very clearly creating that short-term bottom. We had that impulsive move. We had short-term highs, short-term lows. Even last week, if you go to do a 50-minute chart and you look at the price action from Wednesday's 30th November month end, you would actually see a false impulsive breakout of this consolidation, only for the price action to be hammered lower into the early parts of December. Now, from there, price action is still in a corrective nature. We found short-term bottoms here at 136. So it really becomes a case of, do we see dollar yen continue to outperform after 10, 11 months of massive weakness and see that gradual assimilation back into this kind of 131, 132 level? Or do we see one final impulse of strength, potentially maybe back into this order block here between, let's say, 138.75, 139, back up into this region, and then seeing if there's any sort of clear sell-off? Because, of course, you do have a 4-hour order block here. If you would go to a daily chart for a second, we do also have a daily order block at 140.25, 140.30 as well. And, of course, we do have this massive area up here, which is also being unmitigated. But given that we've lower lows, lower highs, given that we've new lower lows, potential for probable lower highs more likely, in my opinion. However, we should potentially get one maybe final impulse to the downside. So let's see how that dynamic plays out as well from just a purely price action perspective. All right, so that brings in dollar yen. Lastly, then, as we move to, before we move to the indices, we're going to look at gold. And gold prices has been very, very interesting because, of course, on the daily time frame, we have seen the price action in gold continue to churn higher off of what's been, again, 8-9 months of consistent selling. Right, this was the gold rally between on the Russian invasion in Ukraine. Then we had that level off. Then through the course of the year, dollar weakness factored through, and of course we had continued lower lows, lower highs until we found a bottom way down here at 1600. Now, structurally speaking, from there, we've had the bullish order flow, we've had a pullback, we've had a secondary high into a key level of price action. As we said here, this area between kind of 1800, 1810 has been structurally very, very important over the last few weeks. We've talked about it in previous videos. And we're kind of seeing that assimilation back in again. Now, from my perspective, I think it's important to weigh up the higher time frame perspective from the shorter time frame perspective, because the cycle analysis that we look at is very, very different on the different time frames. So what you could be looking at on, let's say, a daily time frame could very, very different to what you could be looking at maybe from a 15, 30-minute, 1-hour perspective. And that's why it's important to, when you're looking at all of these different markets, when you're looking at all of these different assets, each market has their own cycle analysis. So you'll have quarterly cycles, yearly cycles, monthly cycles, all the way down to kind of 5-15-minute cycle. So not always will you see a higher time frame viewpoint maybe being bullish with a shorter time frame viewpoint being bearish correctional. So it's important to look at what time frames you're looking at within your strategy, and then being able to articulate that clearly back into the price action as well. All right. So when we look at 4-hour perspective, we've obviously created this short-term top, as we said, around 1810 or slightly underneath that. We had that 4-hour consolidation. We broke structure again, and we've been very, very much flagging back in. So does that mean that the price action is going to create one last impulsive sell-off to this region? Well, perhaps. But so far, we've seen how price action has created highs and lows. Okay, structurally speaking, we've also unmitigated all of this bullish bias. So really, it's just setting the tone of how does gold this week develop between the 1795, 1810 level. See, do we ultimately break through like what we did over here and progress to the upside, or do we see price action ultimately reject this level and allow for a shorter term correctional movement, potentially back into this 1740 level? And that really becomes the key question this week, because of course, if we look at the dynamics, we've had the top formation, we've broken structure out of this short-term impulse, we have flagged back up into this level, rejecting liquidity. So of course, if we draw out our fibs again, structurally speaking, you can see that there very, very quickly. Price action has rejected key levels and is now kind of laboring. Now, the only thing I would say to break this kind of bullish impulsive trend is break of structure, because of course we've higher highs, higher lows, higher highs, higher lows, higher highs, top formation off the 88.6. So we're really looking to see, well, if gold is going to break down, if gold is going to sell off and potentially come back into these 40s that we're potentially talking about, the 50s potentially, we need to see structure ultimately break to the downside, flag back up, and sell off all the way back down into this region. So you're looking for an internal break of structure to say, well, clearly price action's breaking this order flow. We've also rejected this key level, and therefore we're going to continue selling off, flag back up, and then continue with downside momentum. Okay, so that is really kind of what's worth paying close attention to here on gold on this pair of particular interest. So as we move across to the S&P 500, I suppose again the big talking point really is this reaction in price action from this critical zone. right? So structurally speaking, over the last week or so, or even let's say broadly speaking, even longer than that, last 5-6 weeks or so, we've had that clear assimilation in indices strength. Now, the first and important thing here is to learn that we also have to weigh out indices strength in, as I said earlier, the different types of cycles, because of course through the year, every time we've had a bearish impulse, we've had a bullish correction, right? We've had it down here in June. We had an impulse back into 4,300. We've had another new low in October, and we've had another flagging structure back into 4,100. So it's important to weigh up the reality of the situation now. Is this a short-term bullish price action move against an overriding bigger bearish trend? And at this moment, that is the key deliberation, because we're creating on the higher time frames, on the weekly perspective, we're still creating bearish order flow. Very, very important. Bearish order flow, bearish order flow. So we've got phase one, we've got phase two. Are we going to potentially get one more phase three impulse back into maybe 3,400 into potentially the middle part of next year? Let's wait and see. But at this moment in time, from a higher time frame perspective alone, the price action on the S&Ps has gone last week from a bullish corrective movement back into this 4,100 to a strong bearish close last week. And you only have to look at the fact that we rejected 4,000 to the T and has broken structure. Now, that is going to help, or that is going to aid the idea of a dollar recovery. So of course, if the indices progress lower, if the indices, we see that continuated setup of indice weakness, stock market weakness, that's going to help our safety assets, the likes of treasuries, bonds, bond yields, and dollar, specifically the dollar currency. That's going to help add a little bit of strength off of what's been, again, a very, very bearish 6 or 8 weeks or so. So me personally, I'm looking for bias of, let's see, does the sell-off continue? Because the initial signs are very much there. The initial signs for potential ending in dollar weakness is there. So it'll be now a case of assimilating on some of those FX pairs and some of these indices. Are we going to get that change in sentiment? And that really is the most important thing, as I said, into the next 3 weeks or so, into year end, and of course into the early parts of next year to see, does this overriding trend continue to play out, right? And that's fundamentally number one. Now, when we look at the daily perspectives, just isolating impulsive moves, of course, if we just go full screen for a second, look at absorb the price action, we can see here, obviously, this is where we rallied from October, this 3,550, 3,600 level. In fact, we did break structure. We did rally very, very quickly back up into this area of order here, right? Now, my goal over the last few weeks has been to see how does the S&P react between this 4,050, 4,100 level. And of course, last week to the T, we rejected just underneath 4,100, so the upper level of that. Now, structurally speaking from there, if we isolate the price action on the daily perspective, yes, we've had bullish correctional impulses. We're also now breaking structure. And that for me is the most important thing here, because you can see now how the structure has been broken, right? You're not just, I think if you're looking at trading from a fundamental perspective and a short-term perspective, that's fine. That's absolutely fine. That's no problem. But you need to be able to separate the wood from the trees. Otherwise, you're going to be chasing the markets up and down like a dog chasing its tail without a clear idea of, is this a clear shorter-term impulse or is it a broader move that's potentially playing out? And I think that's probably more important than chasing the shorter-term moves up and down, personally speaking, from my perspective. Now, I'm looking at this also here to say, well, we've broken structure because we've obviously had a clear low here, as I said, between 39.30, 39.50. We did break structure last week. So really now it's a case of how does the market dynamic react, given that we've had or trying to break through this daily structure. Now, the secondary element here is not just about the daily, but it's also about this 4-hour bottom here, because we do obviously have this 4-hour tail, very, very clear reaction, very, very clear recovery, all the way back up, final move into 4,100, of which it's been rejected. Now, structurally speaking, we're obviously seeing how the price action is holding, broadly speaking, on the 4-hour, this perspective. So the natural instincts here would be to see, well, if the price action is not going to come back up and mitigate this selling order flow, well, then the likelihood is, can it break through the 4-hour structure, break down, get one last kind of impulse back up here into 39.54, which would be around about this region here, and then alleviate for further bearish selling back into 37s, back into 36s, and then back into unwind all of this bullish correction movement. Now, that is, of course, if the higher time frame trend that we talked about continues to play out, where we had very, very strong rejection last week. It's obviously an initial rejection, but we need to make sure there's a clear follow through. Otherwise, you're selling at a potential short-term bottom, only for the price action to continue progressing higher. So for me, what I would be recommending people to do is look at the structure, look at the 4-hour structure, because I think that's going to help a little bit more of the breakdown, and then being able to articulate a clear viewpoint broadly beyond that as well. All right, so that's the S&Ps there. If we move across to the Nasdaq again, Nasdaq is very, very similar structure. So what has the Nasdaq done for the last few weeks? Well, really not much, because it's been holding or has been reacting off of this 11,500 level, and it's also been reacting off of this 1,200 level. Now, of course, structurally speaking, on the Nasdaq, bearish correctional trend into bottom. Cycle analysis has allowed it to progress through CPIs into the Fed meetings. Of course, Powell last week rallied it higher, and of course, Powell comments last week was the high of the week, only for the markets to erode back into this 11,400 level, 11,500 level, should I say. Now, if you look at it from a 4-hour perspective, and we isolate the price action, well, structurally speaking, we're also seeing consolidation. We're seeing the price action narrowly break out, but ultimately unwind back down. And we're seeing the price action narrowly break down to the downside before coming back up. So really, you're looking for clearer directional bias, because we've poked our head out of this local high. We've poked our head out below the local bottom. We have the price actions back into the range. So what this is effectively doing, it looks like it's accumulating more volume, trying to create a bit of a stop hunting scenario. So of course, if we've got buyers stopped hunt here with this selling impulse, and then we're seeing sellers enter the markets, well, the likelihood is, could you get potentially one last impulse of maybe, let's say, maybe back into 11.8, 11.9, and then see an unwinding rejection when it takes out the short sellers down here from the liquidity sweep, and then ultimately start unwinding back into this 11,000, 11.10 here. That would be kind of the bigger thing to look at. Now, of course, Friday's sell-off, rejected 11.7, has kind of closed very much on the bearish side from the shorter term perspective. So we're very much watching the price action to see, does this sell-off continue today? And of course, does it continue breaking down? That for me is kind of the most important thing. Next on the list then, we're going to finish off pretty quickly, is Dow Jones. And of course, Dow Jones, again, similar scenario, massive recovery in the indices, as we said, over the last number of weeks. Bullish trend, price action took out the short-term liquidity from August, didn't quite mitigate the highs from April, and that becomes a potential scenario for the price action to come and grab if it wanted to. But when we look at the daily perspective, you can see here very, very clearly that, of course, price action has broken out the short-term structure. Okay, so higher highs, higher lows, the whole way up into this consolidation. We've broken down. Price action now trying to break through these cluster of wicks, and that really becomes the important element to see how far is this going to go, right? Is it going to hold this bottom? Can I try and get one last kind of impulse to take out the order blocks, maybe at 34,200, 34,400, or is it going to try and break through these wicks? And if it breaks through these wicks at 33.4, roughly, approximately speaking, this is a long way to go, because of course, what goes up must come down. If we look at a 4-hour perspective, it's important to also look at the price action in the sense that, right, 4-hour perspective, bullish order flow, short-term bottoms, one last impulse, breaks the structure, and of course comes into this area of liquidity here, which is still holding above. So really, if we start to break through, as I said, this 33.3, 33.400 level here, that is really a simulation that further bearish price action is going to come. And of course, that means we're changing the order flow from bullish trend to bearish trend, and then waiting for those corrections, and obviously carrying the trend to the downside. So that's obviously where we are there. Me personally speaking, on Dow Jones, I'm still waiting to see if there is a mitigation of order blocks here around 34,300. That is the last. There's a little bit of a selling candle here, or a little bit of impulse here, but you've also got selling candle, and then this next wave comes in as well. So realistically, this is where I would be looking to sell at this moment in time. But of course, at this moment in time, it may not happen, because of course, if we do break through 300s, the likelihood is it's going to just continue selling off, and then it just becomes a case of waiting for the correctional movements, and then look to obviously take it from that way as well. Last but not least, in Europe, right? Europe is really kind of interesting, because of course, if you've FTSE, isolated FTSE over the last 9 months into this highlighted region, of course, different cycle analysis, bearish trend, bullish trend, bearish trend, bullish trend, bearish trend, bullish trend. Bullish trend here, if we isolate the price action from, let's say, September, or sorry, mid-October, should I say, clear impulses, higher highs, higher lows, consolidation, price action gets into the key level here at 7,600, and it's broken through. And of course, what's happening now? Markets unwinding, very, very correctional. We're now waiting to see, does it take out these short-term wick bottoms here around 74.50? If it does, we're really assimilating that we've gone from higher highs, higher lows to top formation, lower highs, and a simulation and downside bias, where we go structure-wise, something like that, and then look to see, can the price action continue trending lower all the way back to maybe 7,200, 7,250 for a year-end target. But really, you're looking at this structure now to say, well, the likelihood is there is potential to go to 71.50, but I think you're really just looking to see how far can it go in terms of the order flow. But can it go to 72.50, 7300? I don't think 72.50, 7300 at this point in time, given how bullish it's been to now, given the change in sentiment, to see a 72.50 close on the FTSE by year end. So that really becomes an interesting dynamic over the next few weeks to see, does this selling bias continue? And of course, being able to reciprocate that to the price action. Last but not least is the DAX today, to kind of run through our kind of comprehensive price action structure. Firstly and foremost, higher time frames. We talked about it last week, moving the price action structure up. Daily 4-hour level, fully mitigated on the DAX between 14,550, 14,600. We had the consolidation. We had the breakdown early last week. We're now getting that kind of one final move of impulse. Now, when I look at the 4-hour structure, what are we seeing here? 4-hour structure again, consolidation. We've broken through into this short-term bottom. Can we see one last impulse into this liquidity level here? And of course, given that we've now broken structure and the price action is trying to flag back up, it would be beautiful and ideal if we saw the DAX maybe try and rally back into this level up here between 14,450, 14,500 to see if there's any sort of reaction from this level to alleviate or create a potential sell-off from this higher discounted area of interest up here, and then look for that type of selling. Now, of course, whether that plays out or not, let's wait and see. We've gone from a bullish correction move into consolidation. We've broken through the structured area here. So, of course, let's see how the price action is reacting, because, of course, we are rejecting the bottom of this area. And, of course, this is playing out at 382 at this moment in time. So, really, it's just kind of wait and see. Let the price action open up this week. Let the price action open up. Wait to get clarity and get focused. It's not a sprint. It's a marathon. Let those entries come to you. Get those confirmation structures in place, and then get onto those trades once you get those confirmations met. All right. So that's where we are for the weekend, everyone. So of course, with 2 busy weeks left of the year, really is going to kind of epitomize the price action per se. So of course, we're watching that accordingly to see how does the price action develop, and of course, watching the price action, as I said, into the end of the year. Have a great weekend, everyone. Take care.